Welcome to CoinDesk Live. I'm Jen Sanasi, and I'm going to be your host for the next 2 hours. This is day 2 of our live broadcast from Apex 2025 in Singapore, hosted by Ripple. We are coming to you live, where we will be chatting with some of the top minds in crypto and Web3 right here at this desk. Our broadcast is going to take you beyond what's happening here. We're going to be taking a look at what's going on stage, so stick with us. A lot of very interesting conversations coming up. Joining me right now is CoinDesk's markets editor, Amkar Gopale. Amkar, how's it going?
Yeah, it's really good. Thanks for having me, Jen.
I love coming to events like this because I get to meet people IRL, and this is the first time you and I have actually met in real life, and we've worked together for
long time.
A really long time. So talk to me about how the event has been for you so far.
Yeah, it's really good, like an eye-opener because, I typically attend events like, which are like, there are a lot of projects at one time and a lot of action is happening, but this is the first event where, it's just focused on Ripple. It's run by Ripple, and it's an eye-opener in terms of what they're doing in terms of technology and how they're looking at things, etc.
Our audience who didn't see the broadcast yesterday can go back and watch that live stream. But a lot of the conversations I had here at the desk were about stablecoins. They were about Ripple's philanthropic endeavors here in the APAC region and beyond. And we filmed some other videos later on that you'll be able to see on CoinDesk probably in about a month or so, where we talked to some of the innovative startups building on the XRP Ledger. Talk to me about some of the standout conversations you've had, or even what you were looking at on stage.
Yeah, I mean, the first thing I would like to, the key takeaway for me is that, as a markets guy, I always look at XRP's market valuation, and when I talk to traders, there are always skeptics out there, and their primary concern is, XRP has billions of dollars worth of market cap, but when you look at the on-chain activity, it's not really at par with Ethereum or, other smart contract platforms. But, after attending, hearing some of the guys, higher up speak, I understood probably the reason for this divergence is, because XRP has from day one always tried to position itself and focus on just being a blockchain that helps, transfer value on chain, that as a payments network, So they are not looking at, meme coin speculation or trading, all that kind of stuff. So, their value proposition is, we are payments, like blockchain. And that makes sense because, just to give you an example, we all know about Hyperliquid. Hyperliquid is a DEX, and it's a purpose-built, blockchain. Like, they don't have anything else. All they're doing is just perpetual trading on-chain. And so Hyperliquid trades at a significantly higher valuation compared to some of the leading layer 2 protocols like Arbitrum and, Base and others. And the reason is because, Arbitrum, etc., they have host of other projects. So, they're like, assuming other things being equal, like they're running in, 10 different directions. Whereas Hyperliquid is squarely focused on one use case. And it's the same thing for, I think, Ripple in the long term. And that's what the idea I got from, the higher ups. So they're just focused on payments, and it's going to pay off in the long run.
I think focusing on one thing and doing it well, getting the right partners and the right messaging and the right tech stack is always important. So like you said, they are doing it well, and I kind of quantify that with the quality of folks I've met and the quality of conversations. Now, I know we got to go, but I just want to ask you, you are our markets guy. More broadly, if we look outside of the Ripple ecosystem, what are you watching in the markets today?
I would say, obviously, there are two things. This cycle, kind of bull cycle is kind of odd because, we haven't really had the altcoin season. So I'm watching really, the one thing is about the corporate adoption of Bitcoin. But more important than that, over the last few days, few weeks, we have had corporates looking beyond Bitcoin. They're looking at Solana, they're looking at XRP, and I think markets haven't really priced in that yet. So I think the corporate adoption of tokens beyond Bitcoin is something that is, very interesting to me. And the other thing is obviously stable coins, because one of the primary criticism of crypto over the, since 2017 or so is that, it's merely speculation and it's not connected to the main street, or it's not actually playing any role in the economy. But when you talk about, stable coins, they are out there on the main street. So it's a real good use case. I hear that commodity importers, exporters here in Asia, they're actually using stable coins to make payments and move working capital. So it's awesome. It's an awesome example of use case.
Omkar, thank you for joining me at the desk. It's always a pleasure hearing your insights and analysis when it comes to the crypto markets. You can read Omkar's reporting on CoinDesk.com. That was CoinDesk's markets editor, Omkar Gobole. We're going to take a quick break. We'll be right back.
For over a decade, Ripple has worked to bridge the gap between blockchain and traditional finance. We've built enterprise-grade digital asset infrastructure, trusted by the world's largest banks. From instant global payouts and access to off-ramps, to secure digital asset custody solutions, to the stablecoin created with trust and compliance at its core. Ripple enables enterprises around the world to tokenize, store, exchange, and move value. We're not waiting for the future of finance to arrive. We're building the Internet of Value today.
Welcome back to CoinDesk Live. Our first guest joins us at the desk now, BDAC's Chief Strategy Officer, Terry Kim. Hey, Terry.
Thank you for having me on CoinDesk Live.
Of course, thanks for being here. You know, we've been talking all about the APAC region and innovation that's been happening in this region when it comes to the convergence of TradFi and crypto. But I want to start here, just for our audience, give us a quick overview of what BDAX does.
So BDAX is a fully regulated digital asset custodian based in South Korea. We offer a range of custody and related asset services, including tokenization and stablecoin support to enable our clients to build and execute their digital asset strategies in Korea and regionally.
I was just talking to Omkar, our markets editor, about the conversations that are being had here at the conference, how mature they are, and the types of institutions and corporates that are now looking at blockchain and crypto. Talk to me about what that landscape looks like in Korea.
Well, traditionally, Korea was really retail-driven in terms of crypto adoption and digital assets. Institutions, for many reasons, were hesitant about coming into the digital asset market in full force, large part due to regulatory uncertainty. Recently, our regulators have introduced significant legislation and roadmaps that makes it easier for institutions to start looking at how they can strategically and tactically participate in the digital asset space. And I think that's one of the major shifts that we're going to see in Korea, from retail-driven to institution-driven.
I know Korea recently had an election. There's new leadership there. Crypto-friendly president came into power in Korea. Talk to me about how crypto firms are looking at the new administration and how that administration is looking at crypto and, you know, developing new policy and regulation that works for the industry.
You know, absolutely. It's a very exciting time for someone like us, really positioned to serve institutions, largely because the lawmakers have finally come out and started saying that we are adopting digital assets. We are allowing for institutions to create innovative, forward-looking solutions to cater to not just Korean clients, but institutions and retail clients looking to come into Korea. And one of the major things that we're seeing is a melding between traditional finance and the digital asset institutions with the launch of Bitcoin ETFs. And what really excites me most is stablecoin adoption, and in particular, Korean won pegged stablecoins.
Talk to me about Korean won pegged stablecoins, because, you know, yesterday we talked about it a lot, that US dollar pegged stablecoins really are massive right now, but there is a use case for stablecoins denominated by other currencies. What's the main use case that's driving adoption for Korean won-based stablecoins?
Well, stablecoins have significantly increased in adoption in Korea, with companies using it to settle their international trades. I think about 10 to 15% of the cross-border remittance right now is currently happening in crypto and in digital and in stablecoins. And seeing this, it's important for regulators to create a regulatory framework that allows for monitoring, that allows for reporting on stablecoin transactions. And as more adoption of USD stablecoins increases, it's important as a country and as a regulatory oversight to introduce Korean won stablecoins. And I think a comprehensive regulatory framework around stablecoins and Korean won based stablecoins is going to happen in the next 6 to 12 months.
So the main use case, what I'm hearing, is settlements and remittances.
Right now, the predominant use case that we can see is on international settlement and cross-border transactions.
Tell me, I know we're talking a little bit about stablecoins right now, but when you look at the institutional players in Korea, what are they really interested in? Is it stablecoins?
Well, so far institutions, even though they had significant demand, significant interest, there just was no way for institutions to come into this market.
Yeah.
But with the new legislation, new president, introducing a comprehensive digital asset framework law, it's now important for institutions to look at how they can start coming into the digital asset space in a much more regulated way. And this regulatory pathway, I think, is driving the demand, the pent-up demand that really existed under the surface up to the surface.
Are there any gaps that still exist, you think, in Korea when it comes to the institutional adoption of crypto?
Institutions in Korea have traditionally been accustomed to many of the guardrails, many of the infrastructure that you find in the traditional finance space. And a lot of this operational infrastructure right now around digital assets are currently being built up. And as they're coming into the digital asset space, I think it's important for them to consider transparency, reporting, regulatory compliance to ensure that they're able to remain regulatory compliant and to continue building products and services for their clients who are accustomed to these sort of regulatory guidelines.
When you look into the future, I know you talked a little bit about stablecoins progressing in the next 6 to 12 months, but if you look, I don't know, 12 to 18 months out from now, what does the crypto landscape look like in Korea? How do you see that developing?
Well, right now I see a lot of excitement. Even just yesterday, our lawmakers came out with a range of initiatives that's going to promote innovation in this space. And a lot of companies, I think, will jump at this opportunity to start introducing forward-looking solutions. But from my standpoint, I'd like to see the regulation become a little bit more granular, a little bit more detailed, with a much more defined roadmap, so companies like ourselves can understand what the next major milestones are in terms of regulation and how we can better serve institutions who are now looking to come into the market in Korea in full force.
You know, we're sitting here in Singapore. The regulator, the Monetary Authority of Singapore, is who oversees the industry here. When it comes to stablecoins, we talk a lot about what's going on in the US. When you look at regulatory frameworks around the world, is there one jurisdiction that you think is kind of really leading the charge that Korea can learn from?
Well, you know, I have a background in law. I used to be an attorney before I started the company. And when we looked at reference in terms of legal and regulatory references, benchmarks, if you will, we typically look at the United States, we look at Europe, and we also benchmark Japan. And so I think the regulators in crafting a regulatory framework in Korea for digital assets will also look to the United States, to Europe, and to our closest neighbor, Japan.
Oh, that's interesting. How are you looking at developments that are happening in the United States? So many people who have joined me at the desk say, you know, the United States really is the leader in kind of setting the tone for how we view this space. How are you watching it as someone with a legal mind? Is it informing how you build out your roadmap and how you're thinking about the future of building in Korea?
Yeah, absolutely. One of the regulatory uncertainty, one of the products that we really wanted to offer on our platform is staking. And there was always an issue of whether, under Korean rules and regulations, staking would be considered an investment contract. And so many of the companies in Korea were very hesitant to introduce a robust staking platform. But just recently, in the United States, the SEC declared that staking is not per se a security product. And so I think the Korean regulators will look to that and start benchmarking the US's movement in progressing regulatory clarity, and also adopt that staking, for instance, in this one particular instance, is now considered staking, allowing us more freedom to introduce new and innovative staking-related products through our custody platform.
All right, Terry, we got to wrap up, but I want to ask you what you're looking forward to for the rest of the day here at Apex 2025.
Well, I've been listening to a number of great sessions, looking forward to attending more and just learning what the thought leaders in this industry has to say as we go into the remainder of 2025.
Terry, thanks so much for joining me at the desk, and I look forward to seeing you around the rest of the event.
All right, thank you so much.
That was BDAC's CSO, Terry Kim. We are going to now take a look at what's being discussed on the main stage.
And all of a sudden, a global audience that historically hasn't had access to these products can actually get them. You're starting to even see that in a way, but in the reverse with a Bitcoin ETF, That was essentially just a wrapper to make a crypto product available to an audience that didn't have it before. You're also starting to see the reverse, where a lot of people now want to start putting their ETFs, their mutual funds, other assets on chain and make it available to a global audience.
So it's about broader access to these assets and the 24/7 nature that totally resonates. So how are you measuring success in this space? Is it volume on chain? Is it cost savings, number of assets? Like, what are the signals that you look at as real indicators that this is for real a transformation of the financial rails?
Yeah, so there's lots of different ways to measure success. I'm sure if you ask 10 people, you're going to get 10 different answers.
20 different answers.
Exactly. I personally really like looking at how many people are using their crypto wallet, or essentially their on-chain account, for the vast majority of their financial services. And in emerging markets, increasingly, I think you're starting to hit an inflection point on that level, because a lot of people just have their crypto wallet. They use it for their crypto investing, but also for their stablecoin. You can now use it in a lot of different merchant places to actually pay for goods. That, to me, signals true and real adoption. I think the emerging markets are significantly further ahead than some of the developed economies. But the moment you're starting to get more assets on chain, I think you're really starting to see, fundamentally, people want to have one wallet for all of their financial transactions. People don't want to have a brokerage account, multiple bank accounts, a Venmo account. Like, that's fragmentation. No one likes that. Yeah. So the beauty of this technology is it allows you to really aggregate everything into one wallet, one account, one rail. And that, to me, really signals ultimate level of adoption.
Do you have a view of how that phenomenon might translate from emerging markets into the most developed markets? Do you see the same happening for consumers and people in the most developed markets?
I think so, because fundamentally, you have to believe that crypto rails are a better rail to run financial services on. Mm-hmm. If that's the case, over time, everything is going to move to these blockchain-based rails. And I think you're already starting to see that is actually the case. With stablecoins, you can move value 24/7 globally. You can have them engage with smart contracts in ways that previously were never possible. So stablecoins, I feel like, are proving out that thesis. But what you haven't yet had is then other asset classes really moving on to these crypto rails to make that one super financial app possible. You can't now do your normal brokerage investing on chain. You can't yet. You'll be able to do that pretty soon through the work of companies like Ondo.
Yeah.
So more to come. But I think once that starts happening, it's going to be abundantly obvious that this rail essentially is a better mousetrap than what exists today. Take your brokerage account. Once you open up your account, you can't really move your stocks out of it, right? If you don't like your brokerage platform and you want to move, good luck. You're probably going to have to sell your assets and then reinvest it someplace else. Whereas on crypto rails, you can move it around freely from provider to provider, from DeFi app to DeFi app. That's the future that I think ultimately will really speak to people.
Yeah, it's going to be so much more user-friendly on the side of the people instead of having to pay the tolls. So where are we with barriers to adoption to reach your vision state? What are the biggest blockers or things to overcome?
Yeah, the number one that typically got thrown out was regulation.
Yeah.
Right? Making sure that you can do it in a compliant way. I think we're not there 100%, but if you want to do it for outside the US, I think you'd be surprised at how much is already possible. Mm-hmm. And we historically have focused our tokenization efforts primarily outside the US. Increasingly, with the current administration in the US, there's obviously pros and cons, but there is regulatory clarity emerging, and I think people are going to be surprised at what's going to be possible even in the US in the next 12 to 18 months. So in order to actually get adoption and the real blockers, I think they're all disappearing significantly faster than what a lot of people think.
Okay, all right. So we're reaching escape velocity.
I believe that's right.
What do you? So I also think another big shift from 2016 to today is more openness from major institutions of using public blockchains. Like when you and I were talking to banks back in the 10 years ago time frame. I mean, it was like intense fear and just reticence to go onto public chains. That's really changed. So what do you think, what do you see as the important capabilities or factors that institutions need to see to go onto public blockchains?
Yeah, I think, back then, to be fair to institutions, I guess, the maturity of the infrastructure typically wasn't there.
Sure.
And the education that was required, people just didn't get it, right? You need a couple of years, you need a couple of cycles for it to start to click. And I think, honestly, Ripple did a phenomenal job as being part of that education, because I feel like Ripple was the first blockchain to really go for the institutions and say, guys, this is 24/7 movement of value, get with the program. So you were very much ahead of your time, I shall say. But clearly, institutions now are coming on board because I think in part, the technology has proven to be sufficiently robust and quite frankly better in many regards than what a lot of institutions can offer. A lot of the existing TradFi banks look at stablecoins 24/7 value movement and say, whoops, my systems can't support that.
Yeah.
And it is not going to take that long for them to do the same thing when they look at on-chain stocks and ETFs and you name your asset, right? And so I think right now there's really a turning point in how they look at the technology, how robust it is with the ongoing regulatory clarity. The level of adoption and quite frankly in some instances FOMO that we're seeing from institutions is pretty significant.
Yeah. How do we solve for interoperability? Like the one thing we kind of are at risk of is just fragmenting where these assets are available and the liquidity behind them and the infrastructure and that kind of thing. So what's Ondo's view on interoperability?
I love that question because it is quite an important one. We have always taken an approach that we go wherever the users are. So we have issued our assets, I believe, at this point on 10 different blockchains. But obviously, that does lead to fragmentation, and I don't think it's necessarily sustainable. But typically in financial services, liquidity begets liquidity. Like wherever the highest liquidity is, at some point it starts aggregating. So at least from a liquidity perspective, I think liquidity will start to aggregate naturally over time. People are working on technology solutions to really make the bridging between these various blockchains significantly easier, so that will solve it. And I think the last part that really hasn't been solved, but plenty of people are working on, is trying to connect TradFi liquidity onto blockchain rails. Because right now, there is very, very deep liquidity on stocks and ETFs and a whole variety of assets that exists in TradFi rails. How do you connect the public blockchain environment into that same liquidity so you can almost make them interoperable with TradFi? I think that's the next horizon.
Yeah, which is a nice nod for both of our companies in the direction that we're both headed. This is a great tee-up. I mean, yesterday we're really proud and excited to announce through partnership with Ondo, bringing OUSG onto XRP Ledger. So for the people here, can you first talk about OUSG? What is it?
For sure. So OUSG was our first flagship product. It's a tokenized treasury fund where you really take US treasuries, put them on chain. It's very helpful for people who hold quite a lot of stable coins, but that want to earn yield on it. So if you have a little bit of, think of it almost like a savings account. You want to go from your stable coin into a yield-bearing asset. That is really what OUSG is for. It is for large institutions that really want to facilitate and manage their treasury in a responsible way, and we're incredibly excited to bring it to the institutional chain out there, obviously Ripple.
Appreciate that. Leading to a next question of what made you, because you mentioned you have your products on 10 chains. So what was it about XRP Ledger that made sense to you to put OUSG into it?
And OUSG is actually only on 3 chains.
Yes.
The USDY is the other one. It's on more chains, but we are more selective, I think, in the chains that we bring OUSG to. But Ripple was a very natural partner on that because, as mentioned, you guys have the largest institutional track record, I think, of all of the chains out there. We are talking to a lot of the same institutions. When institutions think about allocating capital on chain, it's not just about the asset, it's also really about the chain and the credibility of that ecosystem, of the people that they are working with. They're not just going to go and invest in any type of asset on any type of chain. So from that regard, Ripple was a very natural choice.
And while OUSG is an asset meant for accredited institutions, we have many developers here at Apex building in this space. So what should they take away from OUSG coming to XRP Ledger and the blossoming kind of tokenized treasury ecosystem taking place on the chain?
Yeah, I would say, OUSG is really, it's only one asset, it's only one category. Yeah. It's really in treasuries. But increasingly, I would prepare for a future where it's not just about crypto and stablecoins and now treasuries. It really is going to be anything that you could possibly want on chain. Any type of financial asset is going to start moving on chain to certain chains, right? Where there's already liquidity, where there is adoption, where there's institutional pedigree. But people should really also in this room, I think, start to prepare for a world in which all the assets are moving on chain. Financial services increasingly are becoming 24/7. And for the very first time, like in the next 12 months, I think you're really going to be able to compete or build products that were not possible in legacy finance for the very, very first time. Like if you look at the history of blockchains and crypto so far, there's been a lot of proof of concepts. A lot of the blockchains have really gotten more robust. We've had DeFi that really provided a lot of interesting use cases and mechanisms and technology that really work. But a lot of the critique so far has been, it's a meme coin casino. What's the point? There's only crypto assets. And to an extent, that's kind of fair because people want to buy the Tesla stock and the Nvidias and the S&P 500s, and that's what they think about when they think of finance. But for the first time, those assets are going to come on chain a lot sooner than you think. And as a developer, I think you can really take it to the TradFis and build something that's significantly better than what they can offer.
It's going to be kind of a next chapter of blockchain and crypto as an ecosystem, huh?
100%.
Okay, so now I'm going to ask you one of those questions that's impossible to answer, but you're very smart, so you're going to go for it. Okay.
All right.
We're going to look 5 years into the future. So BCG has predicted, you've heard all these reports, the tokenization market could reach $19 trillion by 2033. So let's say it's 2033. What does the industry look like? Have we hit that number? And what's changed about how capital markets function in 2033?
Oh boy, I love the question though. I don't know if it's going to be 2033, maybe sooner, maybe later, but I do think in 5 years' time, most people who open any type of financial account are probably going to be transacting on chain in some shape or form. I don't think, particularly in emerging markets, that people are going to get a 24/7 expectation of value movement and investing. You're already starting to see that happen. There is a bit of a generational gap in that, but as the newest generation really matures, people are going to expect to transact and invest and get margin and do whatever it is that they want 24/7. So I think in whether it's 5 years, 7 years, 10 years, maybe 5 years is enough. I think the vast majority of people globally are going to be transacting on chain, potentially without them even knowing it, because at that point, the on-chain rails will have proven to be better than what exists in TradFi.
Yeah. I like your vision too of consolidation of the user experience and the access points. As a consumer, I would love that myself.
Right.
Now let's just look at 1 year from now. So we're sitting here in 2026, June 2026. Do you have any hallmarks, any predictions for what you think will happen in the next year?
I'm going to plead a little bit from my own book, but I do think the concept of tokenized stocks and ETFs and on-chain investing, like on-chain brokerage truly and custom advisory, is going to take off significantly faster than what people think and will probably happen in the next 12 months. You can have an eye towards major brokerage businesses moving on-chain in a big way in the next 12 months.
Is that going to happen through our Web2 platforms like Robinhood, or do you have how do you see that playing out?
Yeah, I mean, Robinhood has been very vocal about the tokenization efforts, so I'm sure it'll be a combination, I think, of the most forward-leaning Web2 platforms like Robinhood, and then other platforms, including the Web3 wallet.
Hello and welcome back to CoinDesk Live. We are coming to you from Apex 2025 in Singapore, hosted by Ripple. I'm joined now at the desk by StraightSec Senior Strategic Partnerships Manager, Gloria. Hey, Gloria.
Hello, Jennifer. Nice to meet you.
Yeah.
Very happy to be here.
Of course. Nice to have you here. Now, I had the chance to talk to a few people from StraightSec yesterday. I know that StraightSec is really focused on stablecoin, but started in the payments processing space. Just set the foundation for us. Why did StraightSec make the transition into stablecoins in 2019?
Totally. So StraightSec, our roots were rooted in payments and really solving real pain points that we have seen in Southeast Asia, which is quite fragmented. And over time, I also saw the limitations of the traditional legacy systems, especially when it comes to cross-border transfers. So stablecoins to us is not really something we are chasing the hype or just putting token on a chain for speculative reasons. We're actually really building foundational shift in terms of how money and value really transfers. So today, StraightSec is a regulated Singapore-based major payment institution. And since 2020, when we launched XSGD, we have seen growth, tremendous growth. And over time, to date, we have processed over 10 billion USD in stablecoin settlement across XSGD as well as XUSD, which is a USD stablecoin we started issuing early last year. So this really shows that we are building for scale. Our system is global interoperable, and we want to build a system that is supporting the future of money.
Yeah, I really like how you describe that. It really kind of explains that the transition into stablecoin wasn't a pivot, it was the next iteration of payment processing. You're preparing for the future.
Yes, yeah.
Now, I want to talk about some of your partnerships. I know that you've partnered with Alipay and Grab, two huge brands, not only here in Singapore, but globally. Talking about how that partnership works, how those partnerships work, and what brands like this are looking for when it comes to stablecoins.
Definitely. So our partnership with Grab actually started in 2022 when we first piloted Project Orchid under MAS guidance during Singapore FinTech Festival. So at the time, our work and collaboration was around enabling purpose-bound money involving XSGD in the form of commercial voucher on the blockchain within Grab wallet and Grab ecosystem. And then we saw the potential, and we actually expanded and scaled the use case to include Alipay Plus wallets. So we want to enable cross-border payments from tourists coming to Singapore to be able to make seamless payments to local merchants like they're at home. So, and we really use stablecoin and blockchain to its strength, which is to value transfer. So while for users, there is no change to their user experience, they're using their familiar wallet, home wallet, in their home currency, and to the merchants of Grab in Singapore, they are just accepting payments as if they're accepting local payments at no additional cost and no need for them to upgrade their system. However, we're using XSGD on the blockchain to facilitate the value transfer. So this also minimizes the delay in cross-border settlements that we are seeing today. So we have no impact to holidays, weekends, and also the traditional SWIFT system for settlements. So this kind of like stablecoin sandwich system, we also see that it can help us go to market faster, which is quite critical for giant partners, enterprises, institutions like Alipay Plus and Grab.
I know XSGD recently launched on the XRP Ledger as well. Just tell me a little bit before we wrap up here, what that unlocks for you. What does that partnership mean?
Thanks so much for asking. We're super excited that XSGD is live on XPL today. So this partnership really is a synergy of both organizations building towards compliance, trust, and also more efficient value transfer on the blockchain. Ripple's commitment to institutional stability as well as cross-border payments transfers really align with how our vision at StraightSec as well. There are a whole spectrum of use cases we are working together with the Ripple team that includes both unlocking more use cases, programmable trade within the DeFi ecosystem, as well as also tokenization. So both StreetX and Ripple see great potential within tokenization. We are also seeing how XSGD can enable more seamless access and also access to tokenized assets within different marketplaces and platforms.
All right, Gloria, we are going to have to leave it there. Thanks so much for joining me at the desk.
Thanks so much for having me. Thank you so much, Jennifer.
That was StreetX Senior Strategic Partnerships Manager, Gloria He. We are going to now head on over to the XRPL main stage, where we're going to hear more about innovation in the Ripple ecosystem.
You go back to 2022, 2023. The only way to build ZK systems was through something that we called writing these arithmetic circuits. It was kind of like designing a chip specifically for an application, which you could imagine would be a very expensive and wasteful process. So for example, if you wanted to build a ZK application that proves somebody put you in check in the game of chess, you'd have to write, essentially, you'd have to tell a developer, hey, I need this application. We want to do chess in ZK. And a developer would have to figure out effectively how to build chess as a polynomial, as a math equation. And that's a really difficult paradigm or concept for the average, solid back-end developer. It both required an expertise in software development and in mathematics, and there was maybe a few hundred people that could do this. Our company had a really unique insight, which is actually if we write one ZK circuit that works like a CPU, you could write programs in languages like Rust that compile down and run through this one circuit. And this allows developers to not worry about the arithmetic circuits. They no longer have to write them in specialized languages. They can just write a program in Rust, compile it down, and run it through our ZK VM, and that program inherits the power of ZK. And so this has been a really core innovation. The advances in performance have made it practical and have really made it, in our observations, over 100x cheaper and quicker to develop ZK applications.
That's great. So if I were to boil it down in simple words, there's improvements in both backend as well as frontend that is making this technology more accessible.
Yep, exactly. Performance and then the front-end developer experience has improved dramatically.
Awesome, awesome. And well, I think you already answered this, but risk zero is by building this general purpose compute ZK VM. Is there anything you would like to add that this technology enables that was not previously possible?
Yeah, absolutely. I think if I described sort of this paradigm shift from arithmetic circuits to general purpose programs, and some of the things you get really for the developers in the crowd that I think they'd appreciate is code reuse. This is so critical to all of the software that we build today. So in the previous sort of circuit-based paradigm, if you wanted to do something like verify an Ethereum signature, or even a Ripple transaction, or XRP Ledger transaction or signature, you'd have to re-implement that signature algorithm in one of these arithmetic circuits, which could take months just to do something as simple as a signature check. In these general purpose ZK VMs, you get code reuse. And so what I mean is, like in the Rust ecosystem, which is the primary language that we support, there's a package manager called crates, and you can go there and you can find in the Rust crypto crate essentially any signature algorithm. Just import that crate into the ZK VM and use those cryptographic primitives which have already been implemented. So you can imagine how this really dramatically improves developer velocity, reduces the cost of these developing these applications and such.
Awesome, and that's huge.
Yeah, really huge.
All right, so let's switch gears to some of the use cases, some of the challenges that I think ZK is extremely, incredibly important to solve and solves it really neatly. So first I would like to say that privacy and compliance. We all know that it is an extremely important, these are the extremely important features for mass adoption for institutions. However, we are well aware that these two features are inherently incompatible with each other, right? So how do you think zero-knowledge proofs, this versatile tool, can easily solve this problem for institutions?
Yeah, there's a little bit of misconception about ZK and privacy. I think most of the existing protocols today are 100% private, right? So you think of Zcash, or you think of Alio, if you're familiar with those. And you sort of think from a regulatory perspective, those are huge no-nos because they're sort of completely private. You can't see what's going on behind the scenes. Potentially there's malicious state actors at play and money laundering taking place. But really, ZK enables a primitive that I call programmable privacy. You can actually determine which information you're revealing, which information you're hiding. It doesn't have to be completely private. And so for financial institutions, being able to use this programmable privacy primitive to develop selective disclosure policies and programs that allow you to do private payments but remain compliant, that allow you to provide a cryptographic reveal key that lets regulators look into a specific transaction or find some information about it, really makes it so that institutions can both operate on public blockchains, but provide the required level of privacy that's necessary and expected due to the regulatory landscape and existing expectations.
Absolutely, I think it's extremely important, right? Like, we do not have to necessarily expose the entire data, but what we can do is verify what's necessary, and that's incredibly powerful. Yeah, awesome. Another use case, one we all know, growing area of interest in ZK is for cross-chain or cross-system interoperability, and that field is like fraught with technical challenges. What role can ZKPs play in enabling trust between otherwise siloed systems, whether it is blockchains or any Web 2 application for that matter?
Yeah, this is a really exciting use case for ZK. I like to tell people, I think a simple mental model for ZK is you get three things. You get scalability, you get interoperability, and you get privacy. So sort of within this interoperability domain, how does ZK sort of, what implications does it have? Mm-hmm. As we've improved the performance of these systems, roughly 1,000x over the last 2 years, as I described, all of these new interoperability use cases open up. So to give you an example, we're actually able to prove the consensus of chains like Ethereum, Celestia, soon to be Solana, and even potentially the XRP Ledger. And what that means is, effectively, with these zero-knowledge proofs, if you can prove the consensus of one chain, it's almost like having the ability of running a node of this chain on another chain like Ethereum. So imagine if Ethereum could verify the state of the XRP Ledger in the same way that a node would be able to verify the state of the XRP Ledger. This sort of provides a new basis for trust. Currently, interoperability and bridging happens via custodial solutions, or essentially via multi-sig. Mm-hmm. And we've seen over the last few years how difficult it is to protect those systems using multi-sigs as a basis for trust. There's been billions of dollars in hacks, and while we're getting better, right, and these systems are hardening, there's this new basis of trust that's much more seamless, much more trustless, and relies on cryptography, rather than custody or trusted solutions. So I think that's really, really exciting from a blockchain interoperability perspective. I think for financial institutions, legacy software institutions as well, what's another really exciting interoperability primitive that ZK unlocks is really the ability for blockchains to interoperate with Web 2 crypto primitives. A really simple example is there's standards like OAuth that require, and it's an authorization standard developers would be familiar with, and in some cases require signatures over attested information. So for example, the US federal government has a platform called ID.me, and through their API, you can actually request information like KYC information, citizen status, things like that. And that information is signed. And using ZKPs, we can actually generate a proof of that data, attribute it to ID.me in the US federal government, and then verify that proof on-chain, allowing these Web 2 systems to be interoperable with on-chain systems.
That's something new. I didn't know about it.
Exciting.
Do you have any idea about the adoption of these systems? Like, how popular are they?
Yeah, it's funny. If you want to start a startup, that's probably a good place to do it. There are some teams, like the ZK email team. There's on Sui, there's a project called ZK Auth that are just sort of beginning to use these capabilities. Again, as performance is really just enabling them to be possible. And so I'm very optimistic that ZK will unlock lots of new use cases as we reduce the limits of compute that you can do on chain, like this and others as well.
Cool, makes sense. All right, let's talk about builders. So we're talking a lot about the advancements that ZK Tech has made, but how close we really are for developers being able to integrate ZK into real applications, and what is still missing in terms of tooling or abstraction? What's your opinion on that?
Yeah, I'm a little bit biased, right? But I think this technology is quite practical today. You can kind of think of, you want to go down the path of adopting ZK, you see some value proposition in the technology. You can kind of think of the process for that in 3 phases. There's the implementation phase, developing your ZK logic, integration, like sort of integrating it into your blockchain application or your smart contract application. And then there's the deployment phase, which is like, how do we productionize this and support it? And really, like, all three of those phases have been fraught with really difficult development hurdles. The zkVM has really helped with on the implementation perspective and the integration perspective. There's still some challenges as far as deployment and running these systems in production goes. And we expect that to get easier and easier. So yeah, I think like there'll be continued improvements in performance of these zkVMs, continue like broader language support, things like that, which will continue to lower the barriers to entry. But really today, I think we've done a great job in making this technology accessible today.
Yeah. I guess one quick question before we get into the closing question is like there is all this never-ending debate on whether circuit-based or general purpose VMs are better for, I mean, obviously there are trade-offs between the two. One is good for one thing, the other is for another. But there are still challenges with the general purpose zkVM as, like more abstraction layer you introduce.
Hello and welcome back to CoinDesk Live. We are coming to you from Singapore, where Apex 2025, hosted by Ripple, is underway. Joining us now to discuss more about Ripple's growth and expansion in the APAC region is Ripple President Monica Long. Hello.
Hi, Jen. Thank you so much for having me.
Of course, thanks for being here. I was saying earlier, I love coming to events like this because I get to meet the people that I talk to all the time in person, and so it's wonderful to meet you in person.
Likewise, yes. I'm delighted to meet you in 3 dimensions.
I know. I love it. All right, let's talk about APAC. We're sitting here in Singapore. Talk to me through a Ripple lens how you're looking at the region.
So yeah, the APAC region has been a strategic area of growth for us for the longest time, and that really was marked by the MAS taking an early stance on regulation and creating clear rules for licensure so that you can operate in the region. So we were fortunate to get our license from them back in 2023 for payments. But I think that leadership from a key central bank regulator to be open with the private sector and really collaborative set a tone early on. So I think there's a big first mover advantage in Singapore.
Tell me a little bit more about that. I mean, we talk about being licensed by MAS. Several of the folks who've joined me at the desk are licensed under the Monetary Authority of Singapore. When you look at how other regulators are developing a framework and policy around the world, where does MAS stand?
I mean, I think MAS has definitely been a global leader, and what's wonderful is to see different central banks and regulators having collaboration globally, because for blockchain to really realize its full potential as a new financial rail, you need some consistency in rules, cross-border. Of course, every different regions and different jurisdictions have specializations for certain reasons, but I mean, I think that they definitely are a leader. And I mean, this past year has been really exciting and momentous for the industry because we're seeing, in Europe with Mika and, many other countries, the US with the Genius Act being a very exciting time. So we're getting a lot more regulatory clarity, at least for stablecoins.
When we think about user adoption and developers coming over into the Ripple ecosystem, why is this region so important to you? Like, talk to me a little bit about what's bubbling up here.
Yeah, so I think that payments as a key use case, and we, of course, from the early days, we've seen payments as a killer use case for blockchain. There's really obvious benefits to settlement speeds, being available 24/7, having the ability to lower cost and create more access points where, especially in emerging markets, it can be difficult to get, a US dollar account and be able to transact in US dollars. And I think some of those pain points are really acutely felt throughout the Asia-Pac region. So, it's a region where you have a regulator who gets it and who created clarity early on. You have a vibrant fintech and startup ecosystem, places, not just Singapore, you see it in Hong Kong, you see it in Korea and other places. So you put those factors together, and not to mention, I think the regulatory clarity also has made it possible for large banks, DBS being a key leader in Singapore. We also partner with HSBC in Hong Kong. The the bankers get it too, but they need to know that they're gonna have regulatory clarity.
Right. Yeah, we've obviously, we're sitting at Apex 2025, heard a lot of announcements over the past 2 days. Some have happened at the desk. I know that XSGD from StraitsX is launching on the XRP Ledger. We spoke to the folks over at Ondo who are launching some exciting products on the Ledger. Talk to me about some of those announcements. What are some of the standouts for you? What are you really excited about?
Yeah, I think XRP Ledger has always been kind of a special blockchain from the get-go. It was the first to use a different consensus mechanism and then to have a decentralized exchange built into it. And the vision from the early days really was about tokenizing real-world assets, what we now call RWA tokenization, but tokenizing assets onto the chain and then using the efficiency benefits of the blockchain and opening up more access through like decentralized liquidity pools. So that vision's been consistent for us, and I think with more regulatory clarity, we can really lean into Ripple's advantages. As a company and brand, we've worked with institutions for a long time. So what we're kind of mapping together with some of these announcements this week is really how we're leaning into institutional DeFi. Be it with Guggenheim on a digital commercial paper, or with Ondo and OUSG, and then all of the stablecoin announcements, Braza Bank and Showman in Europe and StraitsX here in Singapore. It's creating a new kind of FX market, but within a DEX.
Talk to me a little bit about working with institutions. How have the conversations changed from even just a year ago to now?
I think the thing that immediately popped to mind when you said that was the conversations in the U.S. Night and day. Literal 180, especially, talking to banks last year. We were working on our banking relationships to launch RLUSD, which we launched in December. As well as we're always talking to banks because a key advantage for us is our payout network for Ripple payments. So those conversations really did turn on a dime with the administration change, and a lot more momentum toward regulatory clarity in the U.S. That's probably the market that I noticed the most market difference.
You talk about XRP Ledger really being the chain and the place for payments and settlements globally. When you look into the future, tell me about that future you're building towards.
Yeah, so I joined the company 12 years ago, so almost at the beginning. And what I can say is, the creators of the Ledger, the founders of the company, have always held this vision near and dear of, making money movement globally as low friction, free and efficient and reliable as possible. And I just, it has taken a long time to get toward regulatory clarity, which then has an effect on our ability to connect XRP Ledger with traditional financial rails, so you get that end-to-end money movement. And so it's been a really exciting journey, and I think we're reaching an important inflection point now.
You mentioned regulation as being one of the barriers, not just, I think, for Ripple, but for everyone in this industry. And now that we have that regulatory clarity, are there any barriers that still lay in your way?
Yeah, it's a great question. Regulation, and we respect regulation, and we want rules, and we want that kind of clarity. So we're pro-regulation, and it takes time. Financial markets are some of the most heavily regulated industry in the world. So for example, we're making progress on stablecoin legislation and crypto market structure bills. But there's still kind of the whole class of tokenized securities and capital markets instruments that probably still needs some time to figure out.
Yeah.
From a tech perspective, what we are working on a lot is compliance tools built into the blockchain. So with XRP Ledger, there's things like authorized trust lines and permission domains, and these are features to enable, KYC and compliance controls for institutions to practically implement the blockchain. But I think we still have more work to do on that front.
Monica, thanks for joining me here at the desk. Thank you for providing that insight into what's going on in the Ripple ecosystem, and I look forward to speaking with you again.
Thank you so much for having me.
That was Ripple President Monica Long. We are going to continue the conversation, take a look at what's going on the XRPL main stage right now.
Stablecoins, they've grown even faster, up from 8.6 billion at the start of 2024 to 23 billion. Top 10, 8 of them are US tokenized treasuries, 2 of them are gold. And yeah, so I mean, if we just think about that alone, we're seeing stablecoins, we're seeing treasuries, and we're seeing gold, but mostly stablecoins, treasuries, up and to the right in terms of holders and users. And then, you know, we're starting to have tokenized funds come online, but often you're going to see 1 holder there, 2 holders if you go on rwa.xyz, just because of the qualified investor qualifications. So for me, what I'm looking at is tokenized treasuries as seeing the adoption on-chain that stablecoins has seen in the last 2 cycles.
Thank you, Matt.
Yeah, so building on what Matt was saying, I think for stablecoins particularly, it's very important to see how they became so mainstream. So initially, stablecoins were an excellent way to move money between exchanges. So let's say you were trading on Bitstamp and some other exchange, Poloniex back in the time. It was very difficult for you to withdraw money back to your bank, move it to another exchange, and then deposit again. So basically, stablecoins found a crypto-native use case, and slowly but surely, over maybe 10 years, were able to reach these market caps. But in order to reach these market caps, there's many things that need to fall in place. And part of that is the business model. So Tether, Circle's business model are very lucrative, as we can see from Circle's IPO and Tether's numbers. Not only is it serving a real use case, which is distributing digital dollars around the world, but the companies providing that service are able to be highly profitable, which becomes a flywheel. Onto the Middle East and North Africa and how we're seeing it on CoinMina's side. So we're very lucky to be regulated by VARA, the Virtual Asset Regulatory Authority in Dubai, who are very forward-looking and are treating digital assets or virtual assets as a new asset class. And yeah, I think the best example to showcase how far we've gone is what Ripple has done with Dubai Land Department, which to me is absolutely insane, and props to the amazing Ripple team for pulling it off. If you told me this 10 years ago, I would have told you you're absolutely insane. But basically, let's look at real estate tokenization. For the past 10 years, real estate tokenization involved bringing up some real estate, putting it in some SPV, and then selling an IOU from that SPV. So you have an SPV where you have opaque shareholding structure, directors, so much counterparty risk that you're not fully aware of. Whereas what we're seeing today is Dubai Land Department is acknowledging that the token is the actual title deed. And that is a shift, really, in the world of tokenization, because you can price it on-chain, you can borrow against it, you can trade it. And in my opinion, that's going to set the wave for the next growth, next leg of growth in asset tokenization.
Yeah, thanks, Talal. Robert?
Yeah, a couple of other areas that we've been looking at is particularly in trade finance. Trade finance, as you probably all know, is key to underpinning and underscoring international trade and the flow of goods. Tokenization in that area is going to grow phenomenally over the next decade. Agriculture is another one. And another sector that is not often spoken about, but we're talking about it in Australia, is government procurement. And so there's a lot of challenges in government procurement, doesn't matter where you are in the world, from corruption in some countries to very tightly controlled in other countries. And we can build efficiencies in that area, and it can save a lot of money for governments moving forward.
Yeah, thank you. So, Talal, from your position in the MENA region, how are you seeing regulators and institutions respond to tokenized assets? And I guess the second part is real-world adoption taking shape?
So the title of the panel says Beyond the Hype. So I think I need to be a bit honest and take us a bit back. So in 2018, I did my first asset tokenization project, and it was the creation of a sukuk, so an Islamic version of a bond. And we did that on public net Ethereum with a bank called Al Hilal Bank, which is now part of another bank. But essentially, we did a test where we created a smart contract that replicates the sukuk, so like think of it as a bond. And we created a stablecoin where investors could send that stablecoin to the sukuk smart contract and then receive their debt token, essentially. And what we wanted to showcase there was the programmability of cash flows. So if you think of how cash flows are distributed in a bond today, it is insanely inefficient, and there's so many different parties involved. Whereas if you were to create a debt token, then that debt token can accrue the interest or the profits. That was in 2018. And until now, we don't really have very popular, until this year, we've started to see money market funds become on-chain and become more widely used. So I guess going back to the earlier point of what are people using it for? So now that you have hundreds of billions of money on-chain in the form of stablecoins, the next natural step is how can I make yield on that? So in my opinion, stablecoins we've seen take our business exponential. Like we started off as a crypto exchange or as a broker-dealer, and now essentially most of our flows are stablecoins because they're serving non-speculative use cases. So I always believe that when technology first takes off, it finds a niche. So I guess with crypto, you found speculative use cases, and now people realized, oh, that's a better way to move money around. So now you have businesses doing payroll, you have companies doing B2B transfers. So we're seeing use cases that go beyond just speculative trading, trying to buy low and sell high and end up doing the opposite, but businesses actually using it for real-world applications. So, but again, institutions have a lot more to lose, which is why, and in some cases, they have fiduciary responsibilities where they can't take the same risk me or Matt would be able to take and logging in with our MetaMask or whatever to play on chain. So it's always worth remembering that with institutions, they have risk committees, they have compliance where they need to take a few extra steps to make sure that they're not taking unnecessary risk.
Thank you.
Can I ask Kalal a question?
Yeah.
So I'm curious for your users in MENA, do you think they would want some form of a native tokenized treasury like a USDY where the yield accrues to the token and then the token price appreciates? Or are they happy with stablecoins? I'm curious what you think from the user perspective.
Yeah, so it's very interesting. We've done a lot of user research around that. Institutions want to get paid out their...
They want the yield, right?
Yes, exactly. Institutions want the yield because I guess the other way to think of it is it's like a balloon payment where you get all your interest at the end. No one in traditional finance wants that, right? You want to get your yields on a ideally daily basis because that's what digital assets can allow because it's become programmatic. But with retail users, to be honest, we're seeing more of the rebasing mechanism being more of a popular approach because it's easier for them to manage it in their portfolio.
Yeah.
Yeah, thank you. I might keep the panel moving. It's a question for all panelists, but BCG and Ripple forecast the tokenized assets to hit $18.9 trillion by 2033. What trends and signals do you give confidence to that trajectory, and where do you still see that friction? Robert?
Yeah, so from my perspective in the work that we're doing at Victoria University is looking at the legal frameworks, and I'll talk more about that later on. But the friction is definitely in the fragmentation of policy approaches across nation states. The ability to get interoperability not only at the technical level, that is the technology level, but also from a regulatory standpoint. So there's two key aspects, but I'll talk more in depth about that and hand it over to the experts here.
Yeah, I mean, I'd just say there's 27 trillion of U.S. treasuries. There's 133 trillion U.S. global bond market. And that's in today's dollars, right? We're all concerned about inflation. So I think getting to 10% of that is conservative. We can get there. I think we will get there. In terms of the friction, I just think it's the regulatory, right? I mean, in terms of looking to the future, this whole panel I thought about beyond the hype, where can we look to the next thing? It's the tokenized treasuries that accrue the yield. But what's the problem? The problem is the regulatory. You know, if you look, I think Ondo was just on stage a couple sessions ago, and the situation is they have USDY, which is it accrues the yield to the token, and that could be the base asset of crypto, right? You could use it as collateral on Hyperliquid. You could borrow against it. It could be the base asset of crypto as a stablecoin instead of Tether or Circle. but obviously they're going to come in with blockers, right? They're going to try to block that. I don't know what's going to happen with the stablecoin legislation in the United States, or if they're going to try to do some acquisition, or they've got a lot of ways they can try to block that. But to me, there's so much to be bullish about just in U.S. Treasuries. We could have the whole panel about that.
Yeah. So I guess the way that I look at it is I like the internet information analogy with crypto and value. So if you think of information online, initially we used to get traditional printed books, digitize them, and move them online. Then we started seeing books being issued purely digitally without having a physical or analog version to them. So now we're moving bonds, which technically don't need a physical element, being moved on-chain. So I think the numbers that BCG are forecasting, as an ex-consultant, it's always funny that there's definitely hard to accurately predict that. But I think we'll be able to reach those numbers once we have assets that are natively issued on-chain. And it's very hard for us to imagine what those assets are. So if you think of how derivatives came about, derivatives were only possible after, on the Chicago Mercantile Exchange, they started showing the prices digitally. So before that, prices were written down in a piece of paper, and it was really impossible to do derivatives without having a live price feed. So with a similar analogy, we don't even know what type of assets are going to come out on-chain, and that's what keeps it exciting.
Yeah, it is what keeps it exciting, right. Matt, for you, like hardly anyone is analysing the trends across the ecosystem, even as well as Masari. So what data points or projects do you see?
Yeah, I think we can kind of split this into two sections where first we look at, what are the BD deals that these, like Ripple's putting together, that Aptos is putting together, all these different chains. What are the deals they're putting together to tokenize new assets on chain? And then, is there really composability for those things yet? No. But what Jazzy and David were talking about yesterday is we're purpose building a blockchain with all these features to have that composability. So we're going to have a lending protocol where in the future we can, deposit these RWAs, we can borrow against them.
Hello and welcome back to CoinDesk Live. Joining me now at the desk is Director of National University of Singapore's FinTech Lab, Professor Jungpil Han. Hello.
Thanks for having me.
Thanks for being here. Now,
glad to be here.
We've spoken to people who are building in the space. We've spoken to some business minds. Now we have an academic here at the desk. And so I'm curious to hear a little bit about how you're thinking about the space. What are some key themes that you're interested in your research?
Well, blockchain obviously is a major technical disruption. It's a new paradigm in technology, right? I think of blockchain as, a technology of trust, right? So it enables trust to occur, organically without having, like contracts and things like that, right? So, it changes a lot of the relationships out there, the business relationships, how organizations, operate, how trust is formed within communities. All these things are impacted significantly by this new technology. So there's a lot of interesting topics to explore. When we implement or deploy at a large scale, what's going to happen, right? And again, blockchain's been focusing its developments on, let's say, the financial services sector, in finance, and that's a major part of our lives, right? And so there's a lot of disruption, and I think the cautionary note that I would like to make is that we need to be a bit careful. We need to innovate, break, and try things, but to do it in a safe way. And so as an academic, I would like to focus on some of these things, the cautions, the boundaries, the breaking points. When does it make sense? When does it not make sense? And so that's been guiding and exciting, my research to this day, and I'm happy to be part of this community, this domain.
You say we need to be careful, and that immediately makes me think, what have you seen where we've not been careful? What do we need to be cautious of? What's driving you to say we need to be more careful?
No, there's a lot of different areas. I think if to take a very, specific example from my own research is that sometimes we assume that, the way in which we build technology and the affordances that that technology offer give us the impression that we will achieve a desirable outcome, but in fact, yet we don't. Like so, in terms of blockchain, I have done some studies. I looked at consensus mechanisms, specifically proof of stake consensus mechanisms, where we know that consensus mechanisms are designed to create decentralized governance. But is that really the case? Like even in proof of work, we see that it's not, right? Because you have mining pools, right, that try to counter the major forces that lead towards decentralization. So we do find in our work that although theoretically, yes, all of the elements that we can think of point to the technology allowing and affording decentralization, we do see in many situations that even these consensus mechanisms tend towards centralization, and that's a danger. Right? We cannot just assume that that's the case. We have to test it, stress test it, so that we know when and where we're comfortable and confident that these desirable outcomes are actually, occurring.
Are we moving too fast?
Good question. I really don't have an answer to that. I think we do need to move fast to understand the right questions to tackle and answer, but we also need, we can't be switching our topics too much. We need more people, I guess, more eyes, more brains, more thinking in the space. But we do need to. We can't spend, just solve a problem, move on to the next. We're going to be solving more and more complex problems. We need the capacity to be able to solve that complexity moving forward. Do we have the capacity to do so? I think we do. I can't guarantee it, but I think we do. If we push ourselves hard enough, I think we do have the capacity to handle the ever-growing level of complexity to some extent. So right now, I think it's okay, but we need to know the problems because these are not just desktop problems, academic problems, ivory tower problems. These are real-world problems.
And it sounds like you're saying that these are not surface level problems. They are really deep. We need to think deeply about what we're building and why we're building it.
Yes. Yeah. So the question is, yes, these are deep problems, and these are complex problems for which, a complex theory perspective or complexity perspective really helps, right? It's not just, if I do A, then B will happen, like a simple causality. There's a lot of feedback loops. There's a lot of, virtuous cycles, vicious cycles. It's a dynamical system, and those are very, extremely complex to study. But we do need to have that complexity mindset to be able to tackle these problems, right? So, when we think about, the immediate cause and effect relationship kind of mindset, the linear mindset, would let us to think that consensus mechanism, if designed in this way, would eventually or guarantee decentralization, but we see that it's not the case. Right? It's not always the case. Similarly with, I've done some studies on looking at, decentralized autonomous organizations and whether they can outperform, hierarchies, the traditional hierarchical organizational design, or like simple communities, like kind of chaotic communities. And we do see that under different circumstances. If we do look at the mechanics and the dynamics of how we can model, the interactions among, the agents in those systems, we do see that sometimes these perform better, sometimes they don't. Right? So really trying to understand the underlying mechanics is really important because the technology will push us to those limits, to those corner cases. And if we don't understand those corner cases, we'll be blindsided. We could be blindsided.
It's so interesting to hear this from an academic's perspective. Now, before I let you go, we got to touch on some Ripple news. I know that the National University of Singapore computing department received $1 million grant from Ripple. And so we talked about your research, the theoretical kind of side of this. Talk to me about how you're collaborating with Ripple, how you're putting the grant to use to maybe do more experimentation, take things from theory to experiment.
Yes. So we've had a long partnership with Ripple through the UBRI, the University Blockchain Research Initiative program for a long time, since 2019, I believe. So this has been a long time going, and this $1 million grant is a renewal of that grant. So we've had more before that as well. So it's been supporting our activities, and we focused our activities on three main pillars. So first is kind of thought leadership, the research research and the engagement with thought leaders and creating the right mindset in the industry as well, and translating our research into into the boardroom, into the regulator's mindset. Our second pillar is education. Obviously, we're a university, and we need to create the capabilities to, upon students who will go out and build things, right? And the third pillar has been innovation. We love to break things, build things, break things, so that we really understand what questions that need to be solved, right? So if you just do a desktop exercise, we can get at kind of 80% of the problems, but we won't really know what problems will surface until we make something, test it, and break it. So we engage a lot of our students who are extremely talented in NUS School of Computing to, come up with ideas and build stuff, participate in hackathons, and take those ideas and actually build artifacts to test, to break, to understand what questions we really need to tackle next. So I think it's been a very exciting journey, and with the help of Ripple's support, we've been able to create, a good ecosystem within Singapore. And right now, we're trying to increase the scope of relationships with other partners in the UBRI network throughout, the Europe, US, North America, and other places as well. So there's a lot of discussion going on here at Apex, and I'm very excited about what's going to happen next year.
All right, Professor, thanks for joining us at the desk and sharing some of that insight from your research and the ongoings at the university with us. I look forward to hearing more about your findings in the future.
Thank you so much for having me.
That was the director of the National University of Singapore's FinTech Lab, Professor Jung-Pil Han.
For over a decade, Ripple has worked to bridge the gap between blockchain and traditional finance. We've built enterprise-grade digital asset infrastructure, trusted by the world's largest banks. From instant global payouts and access to off-ramps, to secure digital asset custody solutions, to the stablecoin created with trust and compliance at its core. Ripple enables enterprises around the world to tokenize, store, exchange, and move value. We're not waiting for the future of finance to arrive. We're building the Internet of Value today.
The IE School of Science and Technology set up an IX virtual asset regulation lab last year in partnership with Ripple's University Blockchain Research Initiative. Joining us now is IE School of Science and Technology Dean and Professor Iklak Sidu for more on the initiative in progress. Hello.
Hi, thanks for having me here.
Of course.
This is a lot of fun.
It is a lot of fun.
Yeah.
We are at Apex 2025. Talk to me about what you've been doing, what kind of conversations you've been having.
Conversations here. Oh, just about changing the world, the normal stuff.
Yes, the regular stuff.
Every day, how to change the world. Yeah, and as you may have heard, there's an entire new decentralized financial system coming into the world. So that's just part of changing the world.
Now, lay a foundation for us. Talk to me about the IX Virtual Asset Regulation Lab. What's your mandate?
Virtual Regulation Lab. Two things. One is we're trying to kind of be the test bed for what are all those applications that policymakers have never thought about. So for example, let's say you're a robot and you're an entrepreneur.
Okay.
Okay, and this is actually possible.
Yep.
All right. So in the virtual world, or you're an actual robot and you're an entrepreneur, we actually have a researcher who came from MIT and is working on this project, making a robot entrepreneur. Mm-hmm. And how do lawmakers look at that? Can you sue the robot? What are they allowed to make money? They're a thing if they do something, just the policy idea. And now they're trading cryptocurrency. Are they a person? Are they not a person? So we're making those scenarios, and we're testing what would work and not work from a policymaker's point of view.
This is all really interesting to me, and I want to zoom out a little bit and talk about our audience at home. There are a lot of people who hear that, robot entrepreneur, and they fear for where we are heading as a society. Talk to me a little bit about that. How are you thinking about these fears that people have about where we're going with AI? What do you tell people when they say they're kind of scared about the future?
Yeah, I mean, I will say AI is kind of like Industrial Revolution, except with the cognitive things that are in people's heads. I'm going to say that it's really a balanced thing. I think that it's nowhere near the kind of dystopian version of the world that people make it out because they've watched all the science fiction movies and then they just add more to that. But on the other hand, there's a lot of things that will change. Some of them are big opportunities. Some of them are relearning how to work in the world. There's a lot of change, but it's also not the Terminator. And like, we just need to realize that.
I want to talk about the policy angle a little bit now. You know, you ask these questions. If we have a robot entrepreneur who breaks the law, whether that's in the physical world or the digital world, how do we look at that from a policy standpoint? Talk to me a little bit about how policymakers are looking at that. I mean, especially in this industry, we see things moving so slowly. How can policy even catch up with this example you're telling me?
I'm glad you asked. I want to talk about how policymakers could look at that. And not because I'm worried about robots being entrepreneurs, but just from the policy point of view, I want to say the high-level message here is what is slowing down most of the progress that venture people could be making, that industry could be making, the things that create jobs, kind of all the forward things that happen in the world. You know, what slows that down? And that is basically when policymakers are holding back, when they're not sure what to do. And when they're not sure what to do, or they have kind of a little bit the wrong mindset, then the answer is just, well, why don't we just stop everything? The easiest thing to do is just to say, well, don't understand it, so let's just go with no. Let's go with no with everything. And I think right now, there's so much change going on in the world. There's so much investment opportunity. I mean, look at Europe just for 1 minute. Because of all the geopolitics around in the world today, Europe is receiving and getting more investment to build its own technology base, to build technical sovereignty. There's so many things that Europe is naturally going to need to do, just in the way the world is changing. And if the policy doesn't catch up with it, they will do all those things and they'll make all those investments, and the policymaker will be, I'm just not sure how to react to that, so let's just be careful and just say no to everything. And all the investment doesn't go anywhere if the policymaker has, I'll just say, the wrong mindset. It really just comes down to that. Entrepreneurs have one mindset. Policymakers, you know, what controls their mindset? And I think we have to figure that out, and we have to help get that balance between protecting people, the population, making the things that are safe, and also not just saying no.
Is there something we can learn from historically? I mean, I imagine you're going to say, you know, previously policymakers have said no, and something has happened from that. But is there something we can look to that we can learn from? Because I think people who are listening to this are probably having a hard time wrapping their head around policymakers moving as fast as innovation.
Well, you know, there's places where I will say, and I'm not going to name anyone just because, you know, I mean, I'm talking about like on the good side. I mean, I think there's great policymakers out there. And, you know, and I don't want to say one is better than another, you know, like name them that way. But there's people who have been progressive. They've brought lots of investment to their regions and their countries. You know, they've really allowed the technology and the people to do what they can do. And maybe we need to have some of the other policymakers learn from those. I think there's a little bit of best practice sharing too. Okay, all right. Maybe I should let you ask the question.
Okay.
Yeah.
I thought you were going to give us a little bit more then, but.
All right. Okay, I'll give you more. Okay. One of my projects that I'd like to start to look into in this space. And, you know, we have collaborators with Ubri and Ripple and so forth. And, you know, and so we're kind of all working towards this direction. But maybe there's a I'm going to say a regulation or like a mindset, regulation mindset index. Like maybe there's a way that we can measure how progressive or non-progressive the person's mindset is. Because it's not just about like, do you know the facts?
Right.
It's about what do you want to do? And so it's a project, and you know, it can help everybody understand where they really are.
Well, that's fascinating. I appreciate you joining me at the desk and sharing some of these insights. Like I said to our professor who just joined us, I look forward to hearing more about your research and your progress, because I think this is what folks need to be paying attention to. So thank you so much.
All right, great. Thank you. All right.
All right, that was Dean and Professor of the IE School of Science and Technology, Iklak Sidhu. We are now going to take a look at what's going on in the main stage.
The plug, Lauren. Obviously, many of you will know that we were acquired by Robinhood. The transaction closed just last Tuesday. So, you know, as of today, we're known as Bitstamp by Robinhood. But what we're really excited about is, you know, combining the businesses, delivering new value to the ecosystem when you have a globally scaled, crypto-native and regulated business like Bitstamp, combining that with Robinhood, which has traditionally been a US-centric retail brokerage, but that being a multi-asset class brokerage, which already has a strong footprint in crypto. I think you know, we're confident that combination is going to be really powerful in the market. But to directly answer your question, you know, before I go into activity that RLUSD or we're seeing on Bitstamp as a centralized crypto exchange, perhaps to understand the partnership that Bitstamp and Ripple and XRPL have had for, I would say, well over a decade, right? That history has resulted in Bitstamp being one of the biggest liquidity venues for XRP and for RLUSD today, right? So that naturally drives a lot of activity on-chain for XRPL, right? And that intersect between, we'll say, the Bitstamp customer base and the XRP community is really strong, right? So structurally, our importance to Ripple and the XRP ecosystem, how does that translate? You know, once we launched RLUSD December last year, we're seeing really strong use from our, we'll call it, traditional user base, right? We're a European-founded exchange, so naturally we're seeing very strong usage from UK customers, from European customers, but also globally, North America, South America, here in Asia, really through the connectivity as a global exchange that Bitstamp provides. I think more interestingly is the split, right? We're a retail exchange that's also serving institutions. And the volume split is actually 50-50, right? And to me, that's interesting because RLUSD today has very much been promoted and positioned for the institutional users and use case. But what we're seeing organically is that retail users are trading with RLUSD and using it for what it was intended for, right? So that's kind of what we're seeing, you know, at the very early stages of RLUSD on exchange. Top 3 traded stablecoin, which you know, it's kind of punching above its weight, right, versus its market cap today.
Yeah, no, that's great to hear. And I think the 50-50 split's really interesting. You know, obviously, Ripple, we build our products for institutions in mind. And I think it's interesting for, you know, me as a crypto user, knowing Bitstamp, Hidden Road are, you know, trusting in the RLUSD stablecoin would give me trust. So it's interesting to see that in the market as well. So, Michael, what specific qualities of the XRP Ledger made it suitable for your post-trade operations, and specifically meeting the demands of your institutional customers?
Our business is pretty simple. We clear billions of dollars a day for clients across a number of asset classes, and as a result of that, we need to consume to the surface of our system millions of trades and events. And so having a robust economical and fast ledger that can process high TPS trades per second is crucial to our business. Whether the counterparties are trading foreign exchange, listed derivatives, fixed income, or crypto, the market tends to have these periods of burst or clusters when there's lots of trades. And so it's important that we have that reliability and scalability. We can't use public blockchains that get congested or become really expensive during those periods. And so when we look at XRP's ledger, it fits those criteria, right? The speed is certainly there, it's cost efficient, and it's really scalable. XRP's ledger is processing trades in 3 to 5 seconds or so, and so that gives that finality to trade that institutions really need and require. If you compare that to legacy systems, again, you're talking about days. And so XRP, doing those in seconds, it really reduces counterparty credit risk as well as unlocks or frees up capital for reinvestment. I think on the infrastructure side, the decentralized architecture of that's crucially important. It removes that single point of failure. And then finally, I think with the new amendments, on the compliance side, like overlaying that, those criteria really fit what an institution needs from a prime broker perspective, and certainly our end users. So we're excited to move the many billions that we do in traditional markets and digital over to the ledger. There's certainly work to be done, but we're really excited to get that going.
And then you pass that as well. I mean, the XRP Ledger as the venue is really important. Have you seen RLUSD and XRP work together on the prime brokerage to bring new utility to your customers as well?
Yeah, there's actually a really interesting use case that's very recent that we've seen from our world, and it's really in the trading side of it, so I'll try to keep it high level. But as folks are probably aware, the CME had recently listed XRP futures. And so one of the most common trades is you see a basis trade, which is to be long the spot and short the future to capture the basis between that. And so as mentioned before, what Hidden Road cares about is the margin to cover the net risk. So we look at that basis of how much that can widen. And so now all of a sudden you have crypto that trades 24/7, you have CME that trades 5 days a week, and now being able to post that RLUSD as that good collateral to cure that margin period has reduced our risk, making that basis trade less expensive, therefore more profitable for clients. So it's an XRP RLUSD story that also incorporates a highly regulated futures contract. So pretty interesting, early stages, but we were excited to clear the first XRP future on the CME.
Wow, that's incredible. And then, Leonard, how has RLUSD improved the experience for users engaging with the XRPL on your platform?
Yeah, I think naturally with RLUSD being natively issued on XRPL, there's a lot of acronyms being thrown around today. It just creates another pathway for users to engage with the chain, right? On Bitstamp, I know very much in line with what Michael was saying. We're really seeing XRP, RLUSD being used for trading, right? Yeah. Particularly the FX trade. So we're seeing, the Euro cross for RLUSD being the most traded pair. But this is just early days, right? We hope, we're really excited about it. And for me, looking after the Asia business, we're super excited about, on-chain remittance, right? Something we work very closely with Ripple and other partners on. I think that, bringing RLUSD into the good things that Ripple is doing, the good things that we're doing to facilitate on-chain remittance is really going to drive volume, is going to drive institutional adoption and obviously engagement with XRPL. So that's growing year on year, and with the right ecosystem players, with the right regulations, education, that's just going to grow, right? But beyond that, right, I've talked about spot trading on Bitstamp. Where else can this go, right? We're looking at quality stablecoins like RLUSD to be embedded in the same way as what Hidden Road is doing, right? So within our ecosystem, we would look to stablecoins to be, at the form of collateral, right, for credit we provide to institutions. We're about to launch a perpetual futures exchange. We need stablecoins for collateral and settlement, right? And then with the combination with Robinhood, right, we're going to make a very aggressive push into the tokenization space, right? I know you guys had some pretty exciting announcements last week in that area, right? So you can expect us to be a partner in that as well. Stablecoins is critical in terms of liquidity, distribution, access to real-world assets, right? So I think as our business scales, Ripple's XRP business scales, we kind of collectively win, right? And I really like what I heard about what's happening in Hidden Road, right? That's within the Hidden Road ecosystem within your customer base. The next step, which is actually very technically possible, is to then have the connectivity to liquidity providers like a Bitstamp, right? We can. I'm not saying this is happening now, but if we unify dollars with dollar stable coins on platform, it just creates near zero friction, right? When you're dealing with us as the counterparty, and then you're connecting all the infrastructure players, right, in the market. So I think that's equally as exciting.
Yeah, that's what the XRPL is built to do as well.
Yeah.
Awesome. Well, I have one more question, sort of a flash question. We've got trading, collateral, we talked about payments and global remittances. What do you think the next new stablecoin use case will be?
Want me to go? Sure, happy to go first. Great question. Two initial reactions. I think one is more on the gloomy side of things, and one is a bit more rosy. And for the record, I think the rosy one will actually come into fruition in the next 12 to 24 months. On the gloomy side of things, I think it could be around surveillance. And what I mean by that is I've always been a little bit worried with governments using blockchains and perhaps stable coins to really monitor, citizens. And one simple thing I think of is, somebody who doesn't pay taxes on time or pays those late, the government, through a regulated custodian could just go in and take those out. I'm not suggesting you shouldn't pay taxes or not pay them on time, but perhaps there's reasons for that. I mean, it's also just monitoring, all your behavior and spending habits. And, if that, not to say they're doing anything nefarious with that data, but that can be frightening if you think about it. So tread carefully on all these use cases. The more positive use case, I would say, is, and I think through regulation, particularly in the US with the Stable Act and the Genius Act, you'll likely start to see stable coins perhaps paying interest down to the end user. And so that will relieve folks that have money sitting in checking accounts or current accounts that the banks pay very little to no interest on. And so credible for the end user. But there's some data out there from a very large bank that has about $17 billion of client collateral sitting in those accounts. They effectively reinvest that in treasuries at 4.25% or 4.5%. They then use those proceeds to pay down the $1 trillion of bad mortgages that they still have on their balance sheet from the financial crisis. And so if you take those things away, what happens? Who finances those bad mortgages? And so I think these are things, as you roll out new use cases, we need to be careful. So I'm sure these are topics being discussed in Washington. I'm all for the end user getting paid that interest, which I think will happen over time. But those are initial thoughts.
You asked me this question yesterday, and I thought about it last night. I'm going to answer your question, but not really answer it.
Okay.
So I'm going to talk about, I would say, market dynamics, right? That I believe is going to happen in the near future. Is based on the fact that not all stable coins are created equal, right? So there's just going to be a bit of economic separation in terms of actual use of stable coins, right? So I'll explain a little bit. So at least this is how my brain works. So, this is driven by, private issuers. They're trying to incentivize their stablecoin to scale. They're also going to want to protect their turf, right? Once they establish that. You're then going to have end users pricing in or factoring in a different risk profile for each stablecoin, right? So in reality, in day-to-day use, right, I expect to see different rate cards, different fee structures when it comes to minting and redeeming stable coins, depositing and withdrawing stable coins. I got this idea from you. At the point of sale, you're going to have different merchants providing incentives, discounts based on use of dollar stable coins. They're all full reserve backed, but they're going to be treated differently, right? So that's probably a very complicated future, but that's just reflective of, it's a free market. You can have private issuance of stablecoins across multiple jurisdictions for US dollar stablecoins. So that's kind of my look into what could happen. Yeah.
What about you, Lauren? What's your use case?
Yeah. Well, I was going to offer context to our conversation yesterday. Taking my RUSD hat off and just being, an end user. I've always thought about, consumer financing out there today. I can use Klarna and I can, get my couch now and pay for it later, or I can use my credit card and I can take on this debt and get points and go buy a United flight or whatever.
Hello and welcome back to CoinDesk Live from Apex 2025. The event really has been a celebration of the XRP Ledger, so there is no better guest to end the show with. Joining me now is Ripple CTO and the co-creator of the XRP Ledger, David Schwartz. Hello.
Thank you, Jen. Great to be here.
Yeah, great to have you here. I mean, I was asking you this just before we started, but does it feel like you have a baby that's growing up when you come to events like this?
I sometimes do feel that way. I mean, I feel like a kind of ownership and a deep connection to what's going on in the XRP Ledger space, and it is just it's actually very emotional for me and very moving to see, what it's turned into. It's been more than a 10-year journey now. And,
could you have predicted this was the direction it was going to take when you set out to build it?
I hope that it would grow into something big and something meaningful, but obviously there's no way that I could have possibly predicted, what that would be. So I'm constantly surprised.
Yeah. We're sitting here at Apex 2025, and a lot of folks from different aspects of the Ripple ecosystem here. We have institutional players. You and I were talking. There are retail investors here. There are folks who are building on the chain. Talk to me about witnessing these community members coming together. What does that mean for you to see folks from really kind of different sides of the spectrum come together?
I think that's one of the great things about Apex. Apex was originally envisioned as a developer get-together, primarily for people who were building to share, technical insights and talk about strategy for, future development. And then it expanded to include retail XRP holders and people who are just enthusiastic about the space and interested in the technology. And I think the big change this year is that you see representatives of institutions who are looking to bring things like tokenized real-world assets onto the blockchain. And I think that's the big thing that's going to catalyze that next wave of adoption, that real mass growth that we're all hoping to see.
Talk to me about the innovation that's happening. And you're the co-creator of the chain, so I want to get into your head a little bit. What are some of the most important innovations that are happening on XRP Ledger?
I think that if we are going to see the sort of mass adoption of the blockchain space and DeFi, broadly speaking, it's going to have to provide the kind of financial services that ordinary people need. Collectibles are great, and speculation in very high-risk assets is interesting. But if you think about what people need a financial system for, they need things like loans, they need payments, they need sensible investments, retirement funds, all of those kinds of things. And I think the most exciting developments are the ones that are going to build those pieces that we need for the DeFi and blockchain space to really take a bite out of that multi-trillion-dollar TradFi market.
From a technical perspective, what needs to happen for us to get there?
I think the big thing is being able to support things like tokenized real-world assets, portfolios of loans, fractional ownership, all of the sort of complexities around the real-world holding of assets. If we can do that, then I think we can compete with TradFi, and that's that's a multi-trillion-dollar market. It's hundreds of times the current DeFi market.
What keeps you waking up every morning and excited to keep doing this? Like, what is it that's driving you to continue to innovate towards the future?
I think the big thing is seeing these technologies really making a difference, really starting to enable people to solve real-world problems. One of the things that's been very important to me is people who are sort of excluded from the traditional financial system, who may be unbanked or where they have a cash economy where they can't, where remittances are very expensive. I think seeing it tackle real-world problems it was interesting, I'm not opposed to things like collectibles or over-collateralized loans or, some of the yield-seeking and staking, but those are not the thing. Those don't solve real-world problems that really impact people's lives, and that's where I think my enthusiasm is. And we're genuinely seeing that inflection point now with things like tokenized real-world assets.
Tell me a little bit more about that. I mean, we talked to a bunch of different folks who are building in the Ripple ecosystem, who are bringing products to market that solve this. But what are some of the ones that really highlight that for you? Tell me about a real use case for these real-world use cases.
Well, I think in the short term, what we're going to see is institutional grade assets like tokenized money market funds, digital commercial paper, tokenized real estate that are going to be primarily held by institutions. But I think we're going to see a pivot where that enables these sort of mass adoption use cases. Stablecoins are a good example. Stablecoins are a institutional product that produced by institutions. The mint-burn relationships are between institutions and institutions, but you see this these DeFi ecosystems, which are anonymous and unpermissioned, that are using the stablecoins as collateral and using them for payments. So I think that we're going to see that pivot between those institutional assets being launched, by well-known companies that are massive asset managers that are going to then at first they're going to sell those products just to institutions, but I think we're on that cusp of being able to use them in those DeFi applications.
Is there anything you think that the market isn't fully appreciating?
I think the market doesn't appreciate that institutional adoption is not an alternative to the sort of traditional DeFi. I hate to say traditional DeFi, that sounds so silly, but retail mass adoption DeFi aimed at direct to consumers. I think what people don't appreciate is that institutional products are what's going to make the next wave of DeFi work. DeFi is kind of a little bit stuck right now in that it's offering the products that we have the capability to offer and not so much the products that people need. And so that's fine, I'm not opposed to doing that, but if we want to grow the DeFi market from the current $120 billion into eating a piece of the $100 trillion institutional loans market or all those other big markets, I think it's that connection that we're going to have to forge. We're going to have to bring that in from the outside.
Is that like a mindset shift? The crypto industry really is one that goes against the grain, wants to create a financial system that solves many of the problems that were created by the traditional financial system. How do you see that mind shift happening, and do you think that the builders who don't have that are going to get left behind?
Yeah, that's a great insight. We are sometimes a little bit exclusionary, we don't want institutions here. We want to be open. We want to be decentralized. We want to be, there's some libertarian view there and some anti-government, fiat is evil because it's tied to this. It's not an or, it's an and. If institutions come onto the blockchain because the decentralization is important to them, and it can be, you might think, well, large institutions would prefer systems they can own and control. Realistically, it's their largest competitors that are going to own and control. Unless you're one of the top 5 institutions, you're not going to be the one who owns and controls it, it's your competitors. And I think that that we don't have to be averse. It's not one or the other. Institutions are going to come and they're going to enable DeFi. They're going to appreciate the fact that these are systems that aren't owned or controlled by anyone. And we can still meet their regulatory requirements on a decentralized layer 1 blockchain. We don't have to pick one thing or the other. More is good, more is better.
All right, we got to wrap up now, David. This is the last chat I'm having today. So I got to ask you, what are you excited about? What's the next milestone for the XRP Ledger? What can we look forward to as we leave this event?
There's a lot of upcoming exciting features on the XRP Ledger, tokenized real-world assets, increasing programmability, I think, to enable it to target a greater variety of real-world use cases, and of course, next year's Apex being even bigger.
All right. Well, David, thanks so much for joining me, and thank you for co-creating the chain that brought us all here.
Thank you for having me, Jen. It's a pleasure.
All right, that was Ripple CTO David Schwartz. Like I just mentioned, that is a wrap for me. Thanks so much for joining me for day 2 of our live broadcast from Apex 2025, hosted by Ripple. We had some amazing conversations right here at the desk. We heard some amazing conversations on the XRP Ledger stage, and that's where we're going to go right now. Thanks so much for joining us. We're going to head on over to the stage to take us out.
For over a decade, Ripple has worked to bridge the gap between blockchain and traditional finance. We've built enterprise-grade digital asset infrastructure, trusted by the world's largest banks. From instant global payouts and access to off-ramps, to secure digital asset custody solutions, to the stablecoin created with trust and compliance at its core. Ripple enables enterprises around the world to tokenize, store, exchange, and move value. We're not waiting for the future of finance to arrive. We're building the Internet of Value today.
You should look at the security stack that's securing your cross-chain messaging side.
Very well put. Standard is very important. So another question to all of you, to the entire panel. From a security or custody point of view, cross-chain exploits have cost billions in lost funds. What lessons has the industry learned, and what best practices are emerging to secure cross-chain connections, specifically for developers building multi-chain apps and institutions that require resilience, audits, and counterparty trust? Should we go first with the...
I can take this one first, for sure. You know, like, Wormhole's definitely gone through its unfortunate incidents in the past, and you know, obviously we've come a long way from that. You know, we work with the likes of BlackRock, Apollo, VanEck, a lot of the bigger institutions now. I think one of the key learnings that we had was we didn't want to build, or we didn't want to focus our energy building standards. We wanted to build frameworks. Now, frameworks are a lot more open. The developer experience is a lot more, you know, accessible, and the developers can choose what they want, what they don't want. You know, an interesting example of that is in one of our integrations with Axelar, we helped Lido go multi-chain, and you know, they used Wormhole technology, but they used Axelar's verifier network. So enabling people to choose what they want, what they don't want, and giving them those choices is something that, you know, I think is coming out as a best practice in the industry.
So diversify kind of the choices and avoiding kind of single point of failure, so to say.
Yeah, so I think I guess I'll echo that, but like I think you have two major components. The first is the design of the system and whether it is, you know, highly decentralized or not. Obviously, there's different flavors as to how people do that. You know, at Flare, we have always been trying to build the most decentralized system possible, and you run up against limitations, right? Like, how do you XRP Ledger has a 32 slot multi-sig. Yeah, so how do you represent a validator set of 100? Bitcoin has an even smaller multi-sig size. How do you represent a set of 100? So that's your first, you know, design choices with regards to the bridge. And then you have code issues, and once you build the design, you then have to code it and those kind of things. And we chose to launch a canary net. A fully monetized canary net. We think that's been, for us, a very good step. We've learned a lot about the protocols, and we've found a lot of bugs. So it's very hard to be invulnerable, but you have to just make pretty much every possible step you can to be as minimally vulnerable as possible.
Constantly evolving and improving. And Sean?
Yeah, I'll just add on to the pointers that was mentioned earlier. But I think at Axelar, the idea is to decentralize the full stack. And what does it mean in actual action, right? So if you look at the governance of every smart contract upgrades that we have, it needs to pass through our 75 validators. It's fully permissionless and open validator set that anyone can participate with a right level of Axelar holdings on that. On top of that, I think we have built in a certain level of defenses within the protocol itself. We have rate limits, we have security audits and bug bounties, kind of add on to the different level of defense on the protocol side.
Thank you very much. And back to you, Hugo. So we know that Flare's mission to bring secure, decentralized data to smart contracts is opening up new possibilities for interoperability. With recent integrations, including with the XRP Ledger, you're enabling broader participation across ecosystems. How does this fit into Flare's bigger vision, and where do you see the most impactful use cases emerging?
Absolutely. So our bigger vision is that almost all use cases in the future involve data from external systems. That's our fundamental vision, whether that's price data, data from Web 2, or data from other blockchains, which are proliferating at a fast rate. combining that with compute, as in the ability to do many calculations very quickly, obviously not on the blockchain because the blockchain doesn't give you the availability to do that, that leads to very interesting product mix. In terms of what we're doing with XRP, it's one of the sort of initial proofs of the use cases of our data capabilities, which is, we've built a blockchain that is fundamentally a database blockchain, and being able to get interactions with XRP and other non-smart contract assets is just like a really low-hanging fruit and provides a lot of dividends and bounties to XRP and those other non-smart contract assets. And as a result, we've found traction there. Yesterday, we announced that we've been building with an external partner a staking product for XRP, and we announced that the first XRP treasury company, Vivo Power, will be committing 100 million to staking XRP through Flare's
Congratulations.
Protocols. Thank you.
Great, then the next question to Ratchet. So Wormhole is one of the most widely integrated interoperability protocols, connecting a wide range of layer ones and app chains. From your lens, where is the demand for cross-chain infrastructure strongest? And what are you seeing in terms of institutional or enterprise interest in this space?
For sure. I think all of us would agree that DeFi is still the strongest use case for interoperability. For context, Wormhole has done about 60 billion in volume in its lifespan, and we've started working with the institutions, but the multi-chain AUM for our institutions is about 4 billion, with BlackRock's Spittle Fund being the highest. I would say a subsegment of DeFi is stablecoins, which also a key part of this conference as well, where you see a lot of the original DeFi players wanting to build stablecoins, but now you have institutions who want to build stablecoins as well. So yeah, just to answer your question, DeFi is probably definitely the strongest use case. You have stablecoins, which is emerging as a subsegment to that, and then on the institutional side, they want to build money markets, stablecoins, all of those different things, but it's very small relative to the larger scale of DeFi. But we'll see how that progresses in the future, and it will probably tipple. We'll see a flippening, but when and how, I don't know. But yeah, the institutions are here.
Totally agree. I think this is very topical now that also we have RLUSD as well with the XRP Ledger. So yeah, a lot of things are happening with the stablecoin space. So if we move on to the next question to all of our panelists, given we're at Apex today, let's get very specific now at one chain for a moment, which is the XRP Ledger. As the XRP Ledger continues expanding its interoperability through mechanisms like hooks, sidechains, and integrations with networks like XLR and Flare, what type of design do you think would be most suitable for XRP Ledger, and how should developers, users, and other stakeholders be most prepared for the advancement of XRP Ledger in interoperability?
Sean, you want
to go first?
Yeah, sure. I think we've been doing a lot of work with developers in the ecosystem. I think just to name a few, there is a money market protocol called Strobe. I think that the idea is to actually utilize different types of logic that's hosted on the EVM sidechain and thereafter do issuance on the Ripple Ledger. So we enable the message passing layer where we can actually cross-settle across the two different chains itself. So you can bring logic and kind of string different types of possibilities as builders on that front, right? So on top of that, I think XLR has a cross-chain token standard that can potentially enable any issuers from Ripple Ledger to actually issue onto other chains, or even existing developers from other ecosystems to actually onboard on the Ripple Ledger very seamlessly without compromising on security and liveliness on that front.
Yeah.
So, we're building out something we call protocol managed wallets, which uses a TEE infrastructure to allow a smart contract on Flare to essentially control tokens on other chains. You can think of that as, in the first instance, as a bridge, but ultimately it doesn't just have to be a bridge. You can take data inputs from Flare's data oracles, whether that be price or state from another chain. And then you can effectively apply a state transition, which then gets represented as a transaction on another chain, whether that's XRP or Bitcoin or Ethereum. So ultimately, what we're trying to do at Flare is abstract away essentially the complexity of all these different chain standards into one essentially EVM layer, which is quite understandable to the majority of people in the industry.
Yeah, and I can talk about it from a user perspective. I think Wormhole's still evaluating how we would integrate XRPL or XRPL EVM. I think as a user, I saw Hugo's presentation yesterday on staking. That was really interesting. I think this conference, I've seen a lot of panels around staking in general, and the concept that you can stake your XRP and get yield is phenomenal. I think that's like a really big upgrade from a user's perspective. I saw a lot of talk about the RLUSD stuff. I think XRP staking plus RLUSD, there are like many different DeFi use cases that I think will emerge. Like you could probably, you know, stake XRP, loan it, borrow against it, use RLUSD to loop it again. I think we'll see a lot of DeFi use cases come out of XRPL as well. And I think the team's already on board doing a lot of this stuff as well. So yeah, from a user perspective, like it's interesting to see how DeFi will evolve on XRPL.
Definitely, and interoperability solutions will play a critical role here because you want to use kind of liquidity from also other chains from the entire blockchain ecosystem. Totally agree. So I want to, we talk a little bit about design there, but I want to go even a little bit more specific and to understand a little bit of technicality of the interoperability design from your point of view. So we know that there are different design choices for cross-chain bridges in terms of the way a crypto asset is transferred. I'm talking about you know, asset transferring. There's burn and mint or lock and mint mechanisms, and there's liquidity network mechanism where a transfer request is passed to liquidity providers, LLPs in our DeFi jargons, who maintain reserves on both chains. Right, you might be running a AMM protocols or something like that, decentralized exchanges on the bridge, and then so that's on asset transfer point of view, and in terms of the level of trust of bridges, they can be controlled by smart contracts or group of validators. So my question is, how do you see the evolution of the design in interoperability solutions? And how could we strike a balance when there are trade-offs between those choices?
Yeah.
Wormhole wants to go first?
I think the first thing that we do need to change is the term interoperability. Like it took me 3 months to actually say it properly.
Did I slip a little?
No,
I slipped a little. I agree.
Like, it's really hard.
Sorry.
Okay, but I think one of the things that we've started working on a lot is our Intents product. So we have this product called Wormhole Settlement. The way that Intents usually work is they're basically solvers that help you bridge, right? So you want to go from chain A to chain B. Instead of going from chain A to chain B directly, there's a solver that basically sends you funds, and then it's basically a seamless process because you get funds really easily. The thing that we noticed was solvers have to rebalance amongst different chains, and that was like a liquidity problem, and it was really capital intensive. So the way that Wormhole Settlement works is we basically enable solvers to just build on Solana, for instance, and then they just rebalance themselves on Solana. I think this is a design mechanism that a lot of the other interoperability protocols will take notice of. I think this is something that we can do on other blockchains as well, as XRPL evolves and they add more functionalities to smart contracts. It's definitely something to evaluate. But I think that type of intense mechanism is something that's interesting to us and something that we've been focusing on.
Yeah, and a lot of research on optimizing kind of the routing, solving routes as well. So yeah, if perhaps Interop or Flare, if you have anything to add.
I'm happy to add to that. My thesis on why we're doing data is that what we've actually built in crypto is extremely inefficient. Like TradFi is more efficient than DeFi in terms of capital usage. The reason we want to combine data with compute is to start trying to find ways to basically patch everything up and make it much more efficient by effectively having one hub of liquidity at Flare where you can effectively abstract away all the other chains. That's sort of our general thesis.
Yeah, so for XLR side, the Intense protocol would be live for XRPL and XRP sidechain as supported by Squid, one of our ecosystem projects. I think it was announced yesterday, Coral V2 will be supporting that solution. So we have the same several mechanism that enables liquidity to move between all the different chains that we support very seamlessly with sub 30 seconds type of settlement. On top of that, having the security of the actual finality that is secured by XLR's messaging. On top of that, I think there are other models that we are thinking today where we can extend the network further, where we can use certain type of light clients, whether ZK or different types of proof methods to actually extend the network in a much more scalable manner, because not every chain would require, the full stack of 75 validators that XLR is providing today. And, there will be certain trade-offs that the chain or application that's building around that would then make the conscious decision, right? So we're helping a lot of the developers kind of think through that model and kind of find the most optimal way to implement that using the XLR network.
Thanks. This is very, very educational. I want to just get a little bit of technical flavor into this conversation. So if we fast forward 5 years, how do you imagine users and institutions would interact with the multi-chain ecosystem? And will chains disappear into the background, or do you think will chain selection still matter?
That's an interesting one. I think the interop space is really conflicted on this topic overall. I have my own personal, I'll share my personal views on this topic. Java, have you seen one of those chocolate packs where they're smaller bounties, there's Snickers in there, there's Mars in there, but you have all the chocolates in one?
We're talking about kind of selection, diversification so again, yes.
You have one packet where you have all the chocolates, but you still, when you open the packet, you still know it's a Mars. You still know it's a Snickers. You still know it's a bounty, right? I think that's the way that will evolve, where interoperability solutions will get so good that you won't realize you're using a chain, but you will still know, because the protocol that you're using will be built on a chain, and they will market themselves as a chain, right? From a user perspective, you may not know, but if you're in the trenches and you want to understand yield opportunities, you want to understand liquidity, you will still have to understand the different mechanisms of the different chains, right? So that's how I think about it. That's totally my personal opinion.
I totally agree. I think you do need to understand, but for adoption only, perhaps on a very high level, you understand what kind of flavor you want without understanding the deep technicality, so that every user can use it. Yeah, Flair.
I think the success of the internet shows that people don't want to know what server they're interacting with, and I think if we don't build a completely abstracted future, then I think we're going to really struggle to get mass adoption. So that's my take.
Agree, yes.
Yeah, I think I'll just end off with regards to this, because our interaction is not only on the DeFi crypto native side. We talk to a lot of the institutions. The idea here is that if you think of today, I think that the people that sit here in Singapore, potentially they know Grab as an application, as a super app. In the US, like Uber, where you can do Uber Eats, you can do transport. You have multiple applications potentially sitting in different servers in different parts of the world. How can you make it seamlessly, right? Similarly for the internet in the very early days, or even the email protocol, right, where SMTP, so on and so forth. That seamless manner where Gmail can talk to Hotmail, I think that's something that we are kind of working towards, and I think different protocols have different ways of kind of expressing that. I think what XLR, the other teams here that's represented, we're working towards that future where users don't even know that they're working on different types of blockchains.
And they don't have to know in order to use it. Great, I think that's a wrap. And now this is the last session of the lunchtime, so we can now interact and interoperate, perhaps. It's a bad joke, but thank you very much. And please join me to thank all the panelists. Thank you.